Welcome to the first episode of Macquarie Warrants Market View. I'm Darren, and I hope everyone has been keeping safe. In this series, hear firsthand from Singapore's investment strategists as they share their views on markets in the coming weeks. For this episode, we have Kon, Director of Wikipedia and SGX Academy trainer, who will share his views on the Singapore and global markets for the month of April.
Did anyone manage to spot for the reversal down during the COVID-19 crisis? In fact, there were some clues given by the market. At the end of every month, I will scan through all the various markets, looking out for any potential reversal down signal. And this is what I see after the last day of January 2020. It is not just an inverse hammer or a shooting star. It is an inverse hammer that has a higher weighting. And what do I mean by that? That month range, it was pretty much stretchier compared to the usual. And for the month of February and March, we all witnessed a major downtrend. And what is my study for the rest of the year for S&P? Now, to get a sense of direction, when the March close, it also represents the close of that quarter. And we could clearly see there was a bearish engulfing body. And it is a bearish engulfing body that carries a higher weighting. Therefore, I am suspecting that the market has already turned bear. And of course, intermittently there will be some rebound, but I would prefer to stay focused when shorting opportunity arises again. And in the local stock, I am studying a 2-weekly chart. And at the close of March, we could clearly see the market indicating there was a hammer that's higher in weighting because the whole body is stretchier than the usual. And this study's shown there are some buying opportunity around here, and I'm expecting for the next few weeks the market to rebound. But do take note, it is more like a retracement than a turnaround. Have a profitable weeks ahead, and always have a measured risk in place.
I hope Kon's insights have provided you with actionable strategies to trade the current market. To do so, you might consider structured warrants to capture short-term price moves, particularly with the recent market volatility. Listed on the SGX, warrants allow you to take long and short positions in the underlying stock or index. Besides, warrants come with gearing which magnifies its price moves. Suppose a DBS call warrant with a 10 times gearing. It means the call warrant would gain about 10% for every 1% gain in DBS's share price. Conversely, a 1% drop in DBS's share price would mean a 10% drop in the call warrant. Now, let us look at last week's performance between warrants and the S&P futures as covered earlier by Kon. Notice the difference in price change of the S&P 500 futures and warrants? There is gearing at play. For investors who expect the bull run to sustain this week, you might consider a call warrant. As for bearish investors, you can consider a put warrant. In Kon's next view on DBS, we see the impact of the government's raised risk share on SME loans from 80 to 90%. This has had a positive impact on the share price since its downgrade in credit rating by Moody's in late March. I hope you enjoyed today's episode of Market View. To trade structured warrants, you can do so via online trading platform, the same way you trade shares. For further details on trading warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on our next video and exciting warrant news by subscribing to our channels on YouTube, Telegram, and Facebook.